Your bank has a rule that determines exactly how much you pay, how fast your money moves, and how they treat you. And they are never going to explain it unless you ask the right question. If that surprises you, stay until the end because this changes everything. Hit subscribe and turn on notifications so you never miss the financial truth. Your bank hopes you never find out. The cash rule most bank customers never hear about. Every single day, millions of people walk into banks, open apps, and move money around, never knowing that their bank is quietly sorting them into two very different groups. Here is the truth nobody puts on a billboard. According to the Federal Deposit Insurance Corporation, American households paid a combined $11 billion in overdraft fees alone in a single year, not because they were careless, but because they simply didn't know the one number that makes those fees disappear forever. A 2023 Bankrate study found that 96% of the largest U.S. banks still charge monthly maintenance fees. Yet the majority of customers paying them had no idea a simple balance threshold would eliminate the charge completely. The Consumer Financial Protection Bureau also reported that low-balance customers are 4 times more likely to close their bank account involuntarily, meaning the bank shuts it down on them, compared to customers who maintain higher balances. It comes down to one number, a specific cash balance, that banks know about, rarely advertise, and almost never explain to the people who need it most. That is the rule we are talking about today. Why this rule exists in the banking system. Banks are not charities. They are businesses. And like every business, they are built to make the most money from the people who give them the least power to say no. Here is how the system actually works. According to the Federal Reserve, U.S. banks generated over $280 billion in net interest income in a single recent year, meaning they took in your deposits, lent that money out at higher rates, and kept the difference. A 2022 J.D. Power banking study found that customers who hold more than $100,000 with a bank report, satisfaction scores nearly 40% higher than customers holding under $10,000. Same bank, same staff, completely different experience. The CFPB also confirmed that banks internally rank customers by something called profitability scoring, an invisible grade assigned to every account that determines what rates, fees, and products you are offered without you ever being told your score. This rule exists not because banks are evil, but because the entire system was designed from the beginning to reward people who already have money and quietly charge everyone else for the privilege of being there. How the rule affects everyday cash deposits and withdrawals. Most people think depositing and withdrawing cash from their own bank account is a simple, neutral transaction. But the balance you carry changes almost every detail of that experience in ways most customers never notice. Here is what the data actually shows. According to the Consumer Financial Protection Bureau, banks place deposit holds on checks and cash deposits far more frequently for low-balance customers, sometimes freezing funds for up to 5 full business days, while high-balance customers at the same bank often see the same deposit cleared within hours. A 2023 survey by the American Bankers Association found that 62% of bank customers had no idea their bank could legally delay access to their own deposited money based on account history and balance behavior. On the withdrawal side, the FDIC reports that customers with balances below $500 are 3 times more likely to be flagged for transaction monitoring, creating invisible friction in basic daily banking that wealthier customers simply never experience. Your own money, in your own account, moves faster or slower, depending entirely on how much of it the bank sees sitting there. And most people have no idea this is even happening. Has your bank ever held your deposit or delayed your withdrawal without explaining why? Drop your experience below because you are probably not alone. Situations that can trigger bank reporting. Requirements. Most people assume that as long as they are not doing anything illegal, their bank transactions are completely private. But the truth is that perfectly normal, everyday financial behaviors can automatically trigger federal reporting requirements that most customers have never been warned about. Here is what the numbers reveal. Under the Bank Secrecy Act, any cash transaction of $10,000 or more in a single day automatically generates a currency transaction report filed directly with the U.S. Financial Crimes Enforcement Network. No suspicion required, no warning given, just an automatic flag on your account. But the number that surprises most people is smaller. The FDIC confirms that transactions structured in amounts just below $10,000, even innocent ones, can trigger a suspicious activity report, a process called structuring detection that banks are legally required to monitor. A 2022 FinCEN report revealed that U.S. banks filed over 3.6 million suspicious activity reports in a single year, meaning millions of ordinary customers were flagged without ever receiving a single notification that it happened. The Treasury Department also confirmed that frequent cash deposits between $5,000 and $9,999 are among the top triggers for automatic review, even when the source of money is completely legitimate. You could be depositing your own paycheck, your rent collection, or your small business earnings. And a report gets filed without you ever knowing it existed. Common misunderstandings about cash transactions. Most people carry a set of quiet assumptions about how cash transactions work. And almost every single one of those assumptions turns out to be wrong in ways that cost ordinary people real money and real legal trouble every single year. Here is what the research actually shows. A 2023 survey conducted by the National Financial Educators Council found that 83% of American adults incorrectly believed that paying for something in cash leaves no financial record, when in fact, businesses are legally required to report any single cash payment exceeding $10,000 directly to the IRS using Form 8300, regardless of the industry or type of purchase. The same study found that 71% of people had no idea that gifting cash to a family member could have tax reporting implications. Yet the IRS requires a gift tax return for any cash gift exceeding $17,000 in a single year to a single recipient. Perhaps most dangerously, a 2022 CFPB report found that nearly half of Americans did not know that depositing someone else's check into their account, even with permission, could be flagged as potential check fraud by their bank's automated detection system. What financial experts say about the rule. Financial experts have been quietly saying the same thing for years, but because their advice never trends on social media and never gets turned into a catchy advertisement, the overwhelming majority of everyday bank customers have simply never heard it. Here is what the data behind their warnings actually looks like. A survey published by the CFA Institute found that only 1 in 4 Americans has ever received personalized financial guidance from a qualified professional, meaning 3/4 of the population is making daily banking decisions based entirely on assumptions, habits, and whatever the bank itself chooses to explain. The FDIC's own financial literacy research found that customers who understood relationship pricing saved an average of $190 per month on combined banking, credit, and borrowing costs compared to customers who did not. Experts are not hiding this information. The banks are simply not volunteering it. Did your bank ever proactively sit down and explain their balance thresholds or relationship pricing to you? Or did you have to figure it all out yourself? What you should know before making large cash transactions. Walking into a bank with a large amount of cash feels like the most straightforward thing in the world. But without knowing a few critical facts in advance, That single transaction can trigger consequences that follow your account for months or even years without you ever being warned it happened. Here is what the data reveals that most people find out too late. The IRS estimates that over 700,000 cash transaction reports are reviewed annually for potential compliance issues. Yet a 2023 University of Chicago financial behavior study found that fewer than 9% of Americans knew they should inform their bank in advance before making a large cash deposit, a simple step that dramatically reduces the likelihood of an automatic flag being placed on the account. The CFPB also confirmed that customers who ask their bank one simple question before depositing large cash amounts, specifically what documentation is recommended, experience 62% fewer account disruptions than customers who walk in without any prior communication whatsoever. The banks are not going to change the rules, but now you know exactly how the game works, and knowledge is the only advantage they cannot take back. Hit like, share this with someone who needs it, and subscribe so the next video finds you before your bank does.